National property values dropped by 1% in November, according to CoreLogic. Joining me now live is Chief Market Strategist at InvestSMART, Evan Lucas. Evan, good morning. We have just seen the latest housing price data drop. What were the key takeouts?
Yeah, good morning, Danica. As you said, it's a 1% drop for the month of November. That's an interesting period from the point of view that November is actually typically the best month of the year for most house sales. So a 1% decline is interesting considering what we've had. It means that for the year, we are now down 7.4% from the peak in April to where we are now. The key takeout, though, is the slowing down of house price declines. It is now at a level that we haven't seen since around about mid-2019. There is signs that also it's starting to really stabilise the markets felt the most, Sydney and Melbourne. They are now slowing to a level we haven't seen since about mid-2018. So there is maybe a sign that the property market decline is starting to finish and that the declines we've seen through this year may only be a 2022 problem.
And the housing and equity markets are now, well, you can imagine they'd be keenly watching the RBA after yesterday's lower than expected inflation read. What's your expectation for next Tuesday's meeting?
Yeah, I think we need to put what happened yesterday into a bit of context because you're right. The equity market and the housing market got very, very excited off the back of signs that inflation is slowing down. 6.9% is still a long way away from where it needs to be, and core inflation at 5%. Still 2% above the top band. So the RBA next week will raise rates. I think that needs to be put out there front and centre by probably 5 basis points, so 1%. The real question that we're all asking is that the last one? Is that the peak of the cash rate here in Australia? Getting to 3.1%, there is argument that's really where it is. So maybe next week is the final rate for this cycle, and that we will see a fairly long pause going forward.
And could we even see cuts to the cash rates in 2023?
You never write it off. I mean, it's an interesting question, Zanika, in terms of where it is. There is a possibility. If it was going to happen, it would be very, very small. Maybe 25 basis point cut. You couldn't see much more than that. It would be most likely at the back end of next year. So, look, you can say that it's a possibility. It's unlikely. Again, as the governor has pointed out, it's about fighting inflation. If inflation continues or remains at a stubbornly high level, then he's going to have to raise rates further. So a cut, it's unlikely. It's possible, but unlikely at this current cycle. But again, people are raising that question, something to look forward to in 2023.
Absolutely. Remains to be seen. Evan Lucas, thank you so much for joining us.